Hi, this is Troy Doty with Northwest Realty Source. If you're a homeowner with a VA loan and you've locked in one of those low interest rates from the past few years, your mortgage could actually become one of the strongest selling points of your home in today's market. And here in the Portland area, where affordability has become a major challenge for buyers, that can make a huge difference. Let's talk about how VA assumable mortgages work and why sellers should be paying attention to them right now. Most buyers today are shopping based on monthly payment more than anything else. And in some cases, a VA assumable mortgage can give buyers access to much lower payments than they would get with today's interest rates. And that can absolutely help a home stand out. But there's also some important things sellers need to understand before marketing their home this way. Here's what you should know. So let's start with the good news. One of the unique things about a VA loan is that they're generally assumable. And this means that qualified buyers may be able to take over your existing loan, including your current interest rate, remaining balance, and loan terms. And in today's market, that can be an incredible value. A lot of Portland area homeowners locked in rates somewhere between 2 and 4% over the last several years. Now, if you compare that with today's rates, and their monthly payment difference can be substantial. For buyers trying to make the numbers work, especially in higher-priced areas around Portland, a lower monthly payment can make your home much more attractive than similar homes nearby. And in some cases, buyers could save hundreds or even $1,000 per month compared to financing with a brand new mortgage today. Now, here's something a lot of sellers don't realize. Your VA loan isn't just assumable by other veterans. Any qualified buyer can assume it, regardless of whether they've served. And that opens up your potential buyer pool significantly because you're not just limited to veterans and active duty buyers. However, there is an important catch sellers need to understand. When a non-veteran assumes your VA loan, your VA entitlement stays tied up on that property. That means until the loan is paid off or refinanced, you may not be able to use your full VA entitlement to purchase your next home. If the buyer is a veteran with their own entitlement, they can substitute their entitlement for yours, which releases your entitlement and restores it for future use. So the distinction between a veteran buyer and a non-veteran buyer matters a lot when it comes to protecting your own benefits going forward. Before you start marketing your home this way, there are also some qualification hurdles to understand. The buyer still has to qualify with their lender. It's not a shortcut around the approval process. They still need acceptable credit, income, debt-to-income ratios, and a full lender approval. But the bigger issue for most sellers is what's called the equity gap. The buyer only assumes your remaining loan balance, not your full sale price. So let's say your home sells for $700,000. But your remaining VA loan balance is only $450,000. That buyer would still need to come up with the additional $250,000 through either cash or secondary financing. And in markets like Portland, where many homeowners have gained significant equity over the past several years, this becomes a really important conversation to have up front. There's one more thing sellers need to factor in, and that's the time. VA loan assumptions are rarely quick transactions, and in many cases, the process can take anywhere between 45 to 90 days, and sometimes even longer depending on the lender. Now, that doesn't automatically make it a bad strategy. For the right buyer, the long-term savings can absolutely outweigh the extra time involved. But you need to go with clear expectations. Sometimes highlighting the assumable loan makes perfect sense and can really set your home apart. And other times, depending on your equity and the buyer pool, it may not move the needle the way you'd hope. That's why thinking through your specific situation before you decide how hard to lean into it. If you're thinking about selling and currently have a VA loan, it may be worth finding out whether your mortgage could actually help your home stand out in today's market, especially here in the Portland area where affordability is becoming more important for buyers every single month. If you'd like help evaluating the numbers, understanding entitlement implications, and deciding whether an assumable mortgage strategy makes sense for your home, please give me a call or schedule on my calendar link. I'd be happy to walk through your situation and help you understand all of your options before you put your home on the market.